Hello everyone and welcome back to the channel. I'm Micha Stocks, and in our channel we talk about stocks, about the stock market, and we summarize the week. And a quick reminder that anything and everything that you see on this video is not financial advice. It's only for educational and entertainment purposes only. Here is our channel. 2,222 subscribers, 46 videos, which means that we summarized the week 46 times. Let's dive in and start this week's summary. This was the best week in the stock market since January. The Dow Jones is up 5%, the S&P is up 5.8%, NASDAQ is up 6.4%, and the Russell, a whopping 7.5%. The sectors themselves, you can see the indices. Real estate leading by 8.5%, then financials, consumer discretionary, and others. Only energy, 2.4%, but still on the green. We see a huge squeeze that came right after the Fed decision, and we'll talk about that in a second. When we also dive into the commodities, you can see natural gas down 1.2%, and crude oil down 3.3%, but on the other hand, you can see steel up 4.8%, aluminum up 1%, and copper up 0.7%. Here are the Magnificent Seven this week. We have Nvidia up 11%, Amazon up 8.5%, Microsoft, Tesla, Meta, Google, and Apple. The worst performer out of the Magnificent Seven, only 5%. And crypto, still waiting for the ETF. Bitcoin up 1%. ETH is up 2.07%. And this is the heat map for this week. You can see most of the S&P 500 on the green. Only some energy stocks down. ExxonMobil, Chevron, and Caterpillar, which is not an energy stock, manufacturing stock, but down due to their earnings. And when we dive in to the major news, we can see that the Fed came back with their decision. If I try to summarize the decision is very clear. This meeting, just like the other meeting, the meeting before, we have not raised any rates. The huge difference, as you will see in a second, has been on very, very limited amount of words. September 20, they saw the economic activity has been expanded at a solid pace. In this week, and thanks to Gur Gavin, and this week they said the economic activity expanded at a strong pace in the third quarter. Not a huge difference because November is relating to the previous quarter. And the second most relevant thing that they said is on September 20, they saw tighter credit conditions, and on November statement, they saw tighter financial and credit conditions. Meaning that the Fed identifies or recognizes the fact that there are tighter financial, not only credit conditions, but that's it. And the market interprets that as the end of the hiking cycle. And if that is the end of the hiking cycle, then it means that probably the next, not meeting, but the next step would be reducing the rates. And that's what the market is expecting. Also on Friday, to fuel that rally, jobless claims came in, and the U.S. added only 150,000 jobs in October. And as you can see, if you exclude June, this was the worst month in a year. What it means is that the job market is cooling, and that's exactly what the Fed wants. Inflation down, job market down, and rates not going up. We had a lot of companies report this week. It was the biggest week of reporting we got from small companies like SoFi and others. We had bigger companies like McDonald's and AMD. And of course, the biggest company in the world, Apple, which we're going to talk about in a second. Most, 85%, if I'm not mistaken on the number, of the companies beat on earnings and revenue. The reason for that is the analysts were so bearish, they reduced the price targets, and companies, of course, beat on that, but they don't always reduce the forecast. Now, why is that important? Is because some of them missed their forecast. Why? Because that wasn't reduced. That created a difference between the results of reporting. Let's dive in. So we talked about this. A few hours ago, Berkshire Hathaway and Warren Buffett reported their earnings, and Warren Buffett and Berkshire Hathaway and Warren Buffett, it's the amount of cash that they have at hand right now is so significant. And I think it's the first time that it's very clear that investing like Warren Buffett for the retail investor is almost impossible. And I'll explain. Warren Buffett and Berkshire Hathaway have $157 billion in cash and cash equivalents. Cash equivalents is the one that I'm going to emphasize in a second, which is up from $147 billion in Q2. The biggest difference between, or 109 from Q3 last year. The biggest difference between Warren Buffett, Berkshire Hathaway, and the retail investor in the past was analyzing companies, diving in, choosing the right companies at a cheap price. At the current state, and there's nothing to blame, they built that empire by themselves, they have such a huge money pile that money market funds that provide them 4, 5, 6% on their cash creates a huge pile of cash with no risk. So at this point, Berkshire Hathaway takes another step towards being basically the one that's only buying the rates that the Fed is providing and the banks are providing, basically buying bonds and enjoying the fact that they have a huge money pile in their hand. And I don't know a lot of people that have $157 billion in their cash. And if they do, probably they're not watching this video. And if you are, send me an email. I'd love to meet you. The fight between Zucky and Elon Musk apparently happened, and Zuckerberg tore his ACL. No, it didn't happen, but he did tore his ACL. Not that it should impact Meta's stock, just feel good, Zucky. Lisa Su from AMD says that data center GPU revenues are going to be approximately $400 million in the fourth quarter. These are new GPUs that they didn't have them, or at least some of them are the new GPUs. And they're going to get next year to $2 billion or exceed the $2 billion mark, which is crazy, crazy spend from the IT side on AMD and NVIDIA chips. And if I mention NVIDIA has right now a $5 billion order from China that needs to get decided. Are they going to export or not? Are they going to change the chips? And are the customers in China going to agree to the change in chips? Because the updated CHIPS Act prevent them from sending it back. Amazon Web Services announces the launch of the new service connected with NVIDIA. Basically, if you can't get NVIDIA chips, Amazon on their cloud, AWS, will be able to rent you GPUs. Six Flags and Cedar Fair are merging one with the other and creating the biggest theme park franchise in the US. It's a combination of stock and cash, a bit complicated. Some are getting this kind of stock, some are getting that kind of stock. If you're a holder of Six or Fun, I suggest you just dive into their investor relations web page and see what exactly you're getting for the stocks you have. And Amazon is implementing Affirm's buy now, pay later capabilities inside their app. This squeezed the firm during the week up 16% or a bit more, depending on how you count it, because this is amazing news for Affirm. Starbucks is going to open 17,000 new locations while cutting $3 billion in cash. They're going to rely a lot on Apple hardware and software, which is very interesting to see how they're going to do that. Sam Bankman-Fried, SBF, was found guilty in all the 7 criminal fraud charges. He's 31, and he faces the maximum sentence of 15 years. So if you combine that together he'll be out of jail at the age of 146. Sounds strange? Yeah, you're right. And Netflix says that their ad tier reaches 15 million global monthly active users. If you remember, a year ago, they didn't have that tier. It's a tier that you pay less and you see commercials. This was their solution to combat password sharing, and it seems like it's picking up. NIO aims to enter the US market by 2025. It's very complicated to enter a Chinese company to enter the US. They need to find some kind of different structure, because the tariffs makes their car very, very expensive. They're already very expensive. It's almost impossible for them to compete. So except saying that they're going to enter the US, it's not that easy. And their financials actually do not support entering any other new country, but actually selling more in the current existing markets. And they're cutting 10% of their staff. At least that's what we know. Tesla and Elon Musk announced that Tesla will produce the next generation platform in Berlin, in Texas, in Mexico. What are we missing? Shanghai. They're probably going to produce that in Shanghai, but wasn't declared yet. And these are early mock-ups of the $25,000 car. Whether it will be a 2-seater, a 4-seater, not clear yet. And everyone's waiting for the Bitcoin ETF. Current date, November 9th. Do I believe? I have no idea. Everyone is waiting. And Nikola, after rolling a truck down the hill and filming it as if it's driving on an electric motor, is due to payments that they need to do, got to a very interesting point where their revenues on the quarter came negative. Think about it. How can revenues be negative in a company? Yes, there's no punch here. And Bill Gross, the king of bonds, says that the regional bank falling knife has hit a bottom. And you remember how you pick up a falling knife. You wait for it to hit the floor and then. And now he's buying TFS, CFG, Key, and FHN. All four are regional banks. And of course, this boosted their stock because if Bill Gross is buying, then it's time to buy. WeWork plans this week to file for bankruptcy, but Friday was a very interesting day. During the end of the market, after the close, starting to get text from the community saying something wrong is happening with WeWork stock. It's supposed to go bankrupt this week, but it's going up 37%. Even at some point, it was up a lot more, 100 and something percent. Look at this. It went up from 0.8 to 1.2, 150%. I was like, what is going on? Well, you should take notice on this. A proposal by Coal Capital seeks to acquire 51% of the minority ownership shares of WeWork for $9 a share. Just a quick reminder, WeWork is trading for 0.82, which means 10 times the value. This is or was probably fake. How do we know? Because when you read inside it, you can see that we have consulted with God before we decided this. And as you can understand, it's a fake report that only pumped the stock and probably made people buy into it so others can sell. And there will be illegal investigations. People will be charged, go to jail, and fun stuff. As usual, thanks for Gurgavin for showing this and exposing this scam. This is Gurgavin. And if you want to get updates on real-time news, he usually provides them. Tesla, for the first time, gets a jury to find themselves not liable for a defect, or actually no defect, in Tesla Autopilot in a crash that happened in 2019. GM and all the three big Detroit car companies have reached an agreement with the UAW, so the strike is supposed to end. It still requires an approval from their employees, but probably the approval will be released. On Monday, Tesla stock went down heavily. Two reasons, or actually three reasons for that. One was Panasonic Holdings reporting that they see soft demand for batteries in the S and X, which are not the leading models for Tesla, so it wasn't supposed to be that dramatic. onsemi reported their results, their earnings, and reduced the forecast, saying that they see slow demand in Europe for electric cars. We don't know if onsemi produces any chips for Tesla, but the market interpret that as sluggish demand for EVs in Europe. And also, it was reported that Twitter is worth $19 billion, That is down more than 50% from the $44 billion Elon Musk paid for that. All three combined created pressure on the stock, but that stock recovered in the days after. On Monday, we also had the Scary Fast Halloween event. This is the first time Apple does an evening event. All of it was shot by an iPhone, which is amazing by itself. And they declared new computers. Nothing more than that. Apple reported on Thursday, not such good reports altogether. But the way to look at it, you can look, let's call it piece by piece. You can look at the revenues that are down. You can look at the EPS. You can look at the services, which are up. But I suggest you look at Apple in a different way. When you look at Apple's revenue, and this is the quarter, or actually the last 12 months revenue for Apple, you can see that when you combine 4 quarters together, every time 4 quarters, the current quarter, of course, and 3 others, you can see that Apple's revenue is declining for the fourth time already. This is a problem. The reason why it's a problem is because it means that the company is not growing. Yes, their earnings per share is growing. Yes, they're able to squeeze the lemon. Yes, they're able mainly to maintain their growth in earnings per share by deleting or acquiring, buying back their own shares. But that phenomena of reduced revenue suggests there is a problem. They might have hit a wall. Now, will we see it next quarter again? I don't know. What I do know is when you compare it to Microsoft and to Google, all other companies are still growing their revenues. On purple, you see the Google revenues, and Microsoft are orange, and Microsoft are orange and Google are purple. You see that their revenues are still growing and Apple is not. That is a word of caution to anyone that invests in Apple. This brings us to next week, or actually the week ahead. We have smaller companies reporting. Berkshire reported, we talked about it. We'll have before the opening on Monday, Dish, BioNTech, and others. After the close, we'll see Realty Income, the dividend company that pays a monthly dividend, which saw their stock declining dramatically, NXPI, Vertex, and others. Tuesday, we'll have Uber, Celsius, Datadog, and others. Interesting thing on Celsius, they've decided they're going to split their stock 3-1. The surprise is that they announced it before their earnings, which is very strange and weird. Very strange. Tuesday, we'll have, after the close, Rivian, Devon Energy, Upstart, and Oxy. Wednesday, Roblox, Fisker, and others. Wednesday, after the close, AMC, Disney, Twilio, and Marathon Digital, a firm as well. Thursday, we'll have Li Auto, Novavax, and after the bell, Plug, Unity, The Trade Desk. Basically, smaller companies, more on the heavier shorted companies in the market, and the week ahead, Fed talk again. So they were on a blackout period. The blackout is ending, and we're going to get everyone starting talking Tuesday and Wednesday and Thursday. Wednesday, we're going to have Powell speak in a conference. Thursday, we're going to have Powell speak. We're going to have other Fed members as well, like Bostic and Barkin. And we're all going to wait to hear what they have to say. And that brings us to the S&P 500, or the SPY. This is the SPY when you look at it on a yearly time frame, year to date. Let me reduce this monthly average, so moving average, so it won't disturb. We had a very, very strong week. You saw it at the beginning. This brings us again to contend with a 4,300. But when you dive into the technicals, you can see that we are currently in a downward channel, and we are getting upward to a resistance. From a technical perspective, this means that around the 4,300 to 4,400, we have a lot of resistance that might pull the S&P back down. The lines in green are gaps. Gaps are the difference between the highest price of the day before and the lowest price in the day after. These are usually closed. 80% of the times, gaps get closed. Why am I mentioning all that? Because when you have a resistance on top of you, you have gaps beneath you in price perspective. and you ran for 5 days in a row, usually you might get a pullback. Is that certain and for sure? No, I haven't been in the future. But from a technical perspective, usually this, let's call it, creates some kind of sense of urgency for people to be very careful about increasing exposure. And in this case, usually they tend to reduce exposure. But having said all of that, when you go back to a more longer term perspective, what you see here is a flag. Now, this flag is a bullish sign. Once the channel will be broken, and I'm not sure it will be broken this week, it might correct back and only go up afterwards. But once it happens, this is usually a breakout pattern that might brings us higher. If you go and look at JP Morgan's desk, they believe we might get to 4,800 by end of the year, which means that we have another 9% upside from the breakout point. Why am I mentioning all that? Because after a week like this, a lot of people start getting FOMO, the fear of missing out. Oh my God, everything is running and I'm missing the rally. Go back to the charts. We are lower than we were October. We are lower than we were September. We are lower than we were on August, and we are lower than we were on July. You're not missing the boat. You'll have enough time. Now, I can't tell you when to buy and how to buy, and of course, dollar cost average to the non-professional is usually best. And again, I'm not giving you financial advice. It's just what the professionals say. But from a technical perspective, from reading the charts, there is still time. You haven't missed it. And by the way, if all the Santa rally that we're going to get is this and we are done, what are we going to do from now till 31st of December? So everyone has enough time. And thank you very much for joining this weekly summary. If you can smash that like button, that will, of course, expose the channel to more and more people. Micha Stocks, thank you for joining. See you next week. Bye-bye.